The following is a paid presentation on News Talk 580 CFRA.
The Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Good morning, everybody. What a beautiful day in the city of Ottawa.
Wow, that's a new voice. Whose voice is that? We got a new host.
Another Gregory.
Gregory
Yes.
Tilley.
Yes,
here.
we got Greg Tilley, who's the photographer, videographer for Paul Rushforth Real Estate, who you've heard many times on the show, is the host of the show.
I'm sitting in the big chair today. Whew.
Yeah.
Yeah.
You're filling it in nicely.
Thank you. I got to tell you, I'm going to miss Steve a lot being on the show, and I wish him all the best. It was a real privilege for the last 3 years to be able to sit and watch such a professional broadcaster here in the studio. Like, it was a real honor for me to be able to witness that and experience that and be here with Steve and you guys. And you guys got to do it for 18 years.
18 and a bit, yeah.
Well, with Steve, right? So Steve's the only person that's ever missed the 2 shows. 906 shows later for him. So
Holy man!
So you have some big shoes to fill, brother.
Big shoes.
What a privilege for Paul and I as well, and yourself, like you said, to learn from somebody like Steve. And you know, the fact that you've been doing it for the last 3 years, been in here, you've learned a lot from Steve as well. So sitting in that chair, I think, should come almost naturally.
But if you're
it's not
new-
going to be
but
as
if-
easy, but
If you're new and you didn't listen to last week's show, Steve Gregory is no longer with us in the way, not in that way, but Steve Gregory's decided, like Frank mentioned last week and we mentioned last week, he's decided after 18 years and a few months that it's time to take his weekends back and spend some time with his family. He's got a young family's grandkids in Toronto, and so he gets to spend more time now in Toronto, which is awesome. So for the longest time, we had Steve host the show, and we're really, really excited for him to take a step back just on the weekends for him to spend more time with his family, and it's a sad day, but it's also a really fun day for Steve.
We definitely wish you all the best, Steve.
Awesome.
All right, lots to get to this week. Numbers are out from the Ottawa Real Estate Board.
They are. Let me put my trusty glasses on. As you know, I'm blind, but you know, it was kind of what we expected. I mean, a lot of people are saying it's funny. Everywhere I go, people are like, "Oh, market's tough." I'm like, I'm not sure what market you're in or what market you're watching. The market is not tough. The market's actually very, very good. You know, we did see it's kind of like some good news sprinkled with a little bit of soft news. But, you know, in July alone, the number of sales was up 4.9%. We saw the new listings rise again. We saw the active listings up 14%. Months of inventory starting to creep up a little bit too. We're now at 3.2. Year to date, it's a different story, but we were 3.2 in July.
And that's still considered a balanced market.
It's a balanced market. It's a balanced market, and our average sale price was up 2.2 in July. So if we take a look at what we were doing year to date, our number of sales are still up 3.1%. Keep in mind, at the start of the year, we were down 5.5%. So we've crept up. We've had a strong April. We had a strong May. We had a good June. And we had an average July, okay, which is, I believe, seasonal. I don't believe it's anything with the market. I believe it's seasonal. So we're still seeing a lot of listings, a lot of inventory. Our months of inventory year to date is actually at 2.9. So we're still in a very balanced market, like I've mentioned before. Some territories are in a seller's market, some are in a buyer's, and some are in a balance. But our average sale price, it was up 3%. We're at $702,000 and change. Keep in mind, at the end of December, we were at $679. So we're still up on the year. If we look at the average sale price where we were at the end of June, we're at $704. So even though we're up 3% year to date, we did come down a little bit from the high of June so far, but only by $2,000. So, you know, the market right now is quite strong. And the truth is the housing market is still demonstrating a lot of steady demand. It has moderate price growth, but it has a healthy level of supply, which is great. So if you're a buyer in this market, and it's one of the first markets I've been in a long time where you could say it's a great market for buyers, but it's also a great market for sellers. And when I say that, there's loads of inventory, which means great. You have lots of choices. The prices aren't going up that much, so the prices are still decent. But if you're a seller, okay, the prices are going up and there's still lots of inventory and the sales are up. So things are selling. So it's a decent market for buyers, a decent market for sellers, and it's more of a normal market. We got spoiled through COVID. This is a normal market. And when someone says, ooh, tough market, I'm like, like I said, I'm not sure what market you're following because it's a strong, decently strong market right now.
Well, I know you've said in the previous months of the year, too, that this is going back to how markets were pre-COVID. Like,
i.e. normal. I.e. normal, yeah. Like this is where This is where realtors and mortgage brokers have to sharpen their pencils and get better at their craft and do things differently. And it's not one of those markets where you can just slap it on the market and it's going to sell overnight and you don't have to do anything. This is like, okay, you now have to have the best skills. You have to have the best photography. You have to have the best marketing. You have to have the best of everything if you want to be successful in this market. And if you're not, you're not going to be successful, right?
Well, and I'm sure pricing must be the number one thing in a market like this for sellers.
It is. I mean, the cheating of pricing, we went after COVID ended, we went through a period where sellers still thought we were in COVID. And as the prices were coming down, they're like, my neighbor got this 8 months ago. And I said, well, 8 months ago was a different market. This is a different market. Sellers now know what's going on in the market. They know the expectations. They know pricing a little better. But at the same time, if you don't price it properly, your home will not sell because there's too much inventory in the market. So if your home is bruised and needs shaping up a little bit, you better do it. And if you're overpricing your home, you might as well sit and wait for the 22 comparables in your area to sell. Otherwise, you are not selling.
Right.
Yeah. And keep in mind, I mean, the numbers are relatively good considering first-time home buyers are still on the sidelines because the interest rates haven't come down enough. And you've got investors that in 2019, 2018, when we had that normal market, were able to go out there and buy a townhouse and be able to cash flow it neutrally. So where now it's almost impossible to do that with the interest rates where they are. Not that interest rates are horrible. They're just not as good as they were in 2019 still. So in 2019, you can get a mortgage for 5-year mortgage for 3.25%, anywhere between 2.75% to 3.25%, which we thought at that time was normal. Then COVID happens and the interest rates go all the way down into the ones. Now we're all the way up because inflation got out of control and unfortunately interest rates had to go up and inflation's still not quite where it needs to be, at least the core inflation anyway, but the interest rates are still elevated. That's why there's so much pressure right now. You listen, Doug Ford did it this week where, he needs interest rates to come down. Trump is obviously doing that. And, Tiff Macklem is holding back and so is Jeremy Powell because they're looking at the inflation numbers. The inflation numbers are very important to determine whether they can lower them. But there's a lot of pressure for interest rates to come down, which I think is good news. And a job report that came out yesterday here in Canada probably leads us to believe that there's potential there for interest rate cuts to continue, hopefully starting in September.
But we have another job report and inflation report before the announcement. Do we not? Do we have both?
We do.
Yeah,
we do. So
those are really going to tell the tale of whether we're dropping rates or not. Right?
They are. We've got 2 inflation reports. One of them is coming out this Tuesday. So Canada's inflation report comes out this Tuesday, and we'll get a good idea of it's expected that the overall inflation will remain fairly stable. It's what's the core inflation going to do, and that's the key factor that I think Tiff Macklem and Bank of Canada is really looking at. And if that number can come down just slightly, at least it gives some hope for potentially Bank of Canada. Now, unfortunately, the next inflation report is the day before the Bank of Canada announces. So
when is that? September
16th is the inflation. September 17th is the Bank of Canada announcement. So, those two are going to happen relatively quick. I would say that if Tiff Macklem got maybe a heads up ahead of time, or that day, he'll be able to make, they may not make a decision until that afternoon on Tuesday whether to do anything with it. And again, there's a job report that'll come out as well. So all those, years, we've been doing the show for 18 years. We never really talked about that stuff because it was never that critical because the numbers weren't that important overall from a month-to-month basis. But now that you see Canadians struggling the way they do, and they really do, there's a lot of Canadians struggling. I've had a number of conversations this week with clients that have their mortgage coming up for renewal. And number one, they're really, they're upset. They're disappointed that interest rates are as high as they are. They didn't expect them to be where they were 5 years ago, but they didn't expect them to be this high either. And now they're carrying debt, and they're making the comments, we're a 2-income family. We're not doing anything extravagant, and yet we're still barely making ends meet.
There's a lot of people
Barely
living
making ends
paycheck
meet.
to paycheck.
Yeah.
Frank, you said at the start here, you're like first-time home buyers because of the rates haven't come back into the market. But we are seeing some positive signs of they're slowly starting to come back, and some have come back. We're not getting 100% of them. I think we might be halfway there. We saw the single-family home market go up 2%. We saw the townhouse market go up 8.3%. So seeing your townhomes go up 8.3% is great news because that's the first-time home buyer product. The thing that's lagging this market and carrying it down like a little bit of an anchor is the condo market. The condo market's down 1.6. as a benchmark price. So the condos are really the struggle right now, where the townhomes are very popular, which I said at the start of the year, I think they're going to be super popular as well.
Well, just price-wise, right?
Price-wise, absolutely.
Yeah, we got to go to break, but we could talk about the job report too, because that was a critical report that came out yesterday that really highlights what we feel like a lot of us have felt has been going on, but yet the job reports have been inconsistent over the last few months, where they really opened up some eyes yesterday. Certainly nothing close to what the consensus was. So really surprised everyone.
All right,
So
we'll
Greg,
get back to that after the break.
But Greg, this is where what Steve would have said to Frank right there is, I do the show. I am the moderator of the show. You decide when we go to break.
I'm the new guy.
This is
521
your
Talk, 521-8255.
All right, so you.
All right, to the phone we go. We got Mike on the line. He's looking to sell his house and talking about a line of credit.
Morning, Mike.
Yeah, good morning. Hi. I guess question mainly for Frank.
Yeah.
Want to get your thoughts on my scenario here. So, recently retired, 70 years old, and have a pension income of about 90K per year. Now, own a 900K house in Qualicum Grand Park with a secured line of credit on it, 250K.
Okay.
I plan to sell and buy another one for maybe 800K.
Okay.
So once I transact, given my age, retirement status, do I have easy access to another secured line of credit?
Of course you do. Lines of credits are home equity lines of credits, which is what you have, are based on obviously the property itself, because that's the collateral for the lender, for the bank. At the same time, whether you're capable of carrying it. So age does not play any part in this. There's no discrimination against age. So regardless of whether you're 70, 90, 20, it doesn't matter.
And technically, he has income, right?
Right, he's got a $90,000 pension, which is very, very good. I mean, obviously, you've done a lot of years at a certain employer that's granted you the opportunity to have a very healthy pension moving forward. So,
exactly,
you're going down by 100,000. So, presumably, you might not need the 250. You might only need the 150 or 175, depending on cost to sell the house versus purchasing it. But nonetheless, your income allows you to qualify for about 4 times when it comes to the limit. So, if your pension income's $90,000, I would say that you should be able to get anywhere between a $350,000 and $400,000 limit on a home equity line of credit, and then how much of it you use is what you pay for.
Yeah. Is that normally just through a bank?
Through a bank, through us, through mortgage brokers. We do lines of credits all the time. We've got a number of lenders that, and some of them that are better priced than others. They don't advertise it, but because we do so much business with them, we actually get a little bit better pricing. I would say to you, do you want a line of credit? Because the goal is maybe the only thing I say about home equity lines of credits, they're a little bit more expensive than getting your traditional mortgage or traditional adjustable rate mortgage. So, I think taking some time and going through the benefits and disadvantages of both will allow you to determine whether you want to stay with the line of credit. Most people that stay in the line of credits because they have plans maybe to sell in a year or two, or they're expecting money to come in a year or two, which will allow them to pay it off. But if you're going to maintain the balance for the entire 5-year period, you might be better off to go for an adjustable rate mortgage, which would be prime minus a half maybe, versus a line of credit that would be prime plus a half. So it's a 1% difference, and it doesn't make a big difference if it's 10 or 20,000. But when you're talking 250,000, then that's enough money in your jeans to be able maybe to go down south for a week somewhere.
Yeah,
so
the line of credit, basically you use it more as a slush fund.
Yeah.
Right.
Well, you can have both though, right? You can have both. Where if you know that you're not going to knock it down, then you can say, okay, let's put 200,000 because I know I'm not going to be able to pay it down quickly. Let's do 200,000 as a mortgage, and then you still have a global limit of 400, which allows you to have access to the other 200 should you need it.
Right.
So,
hey, Mike, first of all, congratulations on retirement. That's amazing.
Great. No, it's good.
Good. Congratulations.
You guys will benefit from it one day, I guess.
I don't know.
Frank much sooner than me for sure, but yeah, one day we will.
I'm 62 and I don't even think about retirement just yet. So it's crazy, but a lot of people do. But when you love what you do, why would you give it up? And I tell everyone I still enjoy what I do, and I don't consider it work. I consider it, doing what I enjoy doing, and it's like a hobby. So, why would you give that up? So for me, I have no thoughts on it.
Well, Mike, I'm 51 and I've had to deal with Frank for the last 19 years, so I really want to retire.
Paul's ready. Thanks a lot for the call, Mike.
I appreciate it, Mike.
Thanks,
Thank
Mike.
you.
Well, I mean, can you imagine dealing with Frank for this long?
My wife has 39 wonderful years.
And you've been happy for how many? 32?
No. She's been happy for less. But anyway.
That's marriage, bud. That's marriage.
It is.
That's
It is.
marriage. But
It
you know
is.
what? It's great to hear stories like that, and that's a healthy pension. And a lot of people don't realize that, once you retire or you're starting to age, that you've said it many times, because we used to make the jokes about Steve about can he actually get a mortgage at his age, and he's like, they don't discriminate on age, do they?
Nope.
They can't, right, Frank?
They
It's
can't.
written in.
They can't. Can they question? Sure, they could. But then guys like me can go back and say, yeah, no. No, the rules clearly state you qualify people on their mortgages based on their credit history, based on their income, and the ability to be able to carry that debt. You can't assume that something is going to happen down the road, because you don't know. Whether you're 30 or 70 years old, your life could be a year away from ending.
Things
So
can
it
change
doesn't
quickly.
matter. Very quickly, you can lose your job. You can lose. Like, I think a pension to me is a lifetime. Now you've got a lifetime income. Where on a job, you can lose your job the next day, and next thing you know, now you don't have the income. Where in this case, his income is guaranteed now for the rest of his life. So
we are starting to see, and maybe it's been happening for a while, but I'm starting to see it a little bit more. We are actually starting to see people, as they start to age, selling their house, renting for a few years before going into a retirement residence or doing something different. Whereas in the past, I never really saw that. I saw people selling their home eventually and then going right into either a retirement residence or living with the kids or something like that. But we're starting to see more people free up that capital, and maybe it's to give to kids, maybe it's to do something with, maybe it's to travel, maybe it's whatever it is. But they're actually renting for a few years before they make that next transition or that next step, which maybe makes sense, right? I mean,
is there an advantage to doing it that way, or is it a situational thing depending on the person?
Well, I think it's a situational thing. I mean, I know that, when I age at one point, and I know that, my next step might be a retirement residence, or might be, I don't know, if my kids want me to live with them, I don't know, but it might be something like that. And if I have, a house that's worth, let's say $1 million, and it's, I don't know anything on the house, and I want to free up some of that capital. Maybe maybe my kids are needing some money at the time.
it's tax free at that point if you sell it, because you've lived in the property.
Exactly.
So whatever you're getting, you don't have to pay any tax on it.
And I could set my kids up for life at the same
100%.
time. Maybe give them a couple $100,000 each to set them up for maybe getting a house, something like that. And at the same time, and then because who knows? I mean, I'd rather have them enjoy the money while I'm still alive rather than enjoy it when I'm gone. But it's teach their own. I mean, I don't mean to chat about a morbid conversation, but it's just I've noticed a lot more that people are freeing up their homes, selling their properties, renting for a couple years until they're ready for that next step in life, and it's happening more often, to be honest with you.
That makes a lot of sense, Daddy.
All right.
Okay. Don't forget me, Daddy.
Yeah.
When you're handing out that money.
Yeah, exactly. I'm in your will, aren't I, Frank?
Oh, of course you are.
Yeah, good.
Yep.
521-TALK, 521-8255. We'll be right back.
Good job, Greg. Good job. You didn't jump in. Steve's giving you the thumbs
tempted.
up.
I caught
He
it
was
this
tempted,
time. I
though.
caught
He
it.
was
My finger was hovering over the button.
But you know what? That's new, right?
Yes, it is.
That's new, where they
It
announce
is.
our name just going after coming out
Yeah,
of
they
break.
didn't used to do that.
No, they didn't. So
Like I
I
said,
li-
I've been away for 3 weeks, so I haven't. This is the
whoosh.
first time I'm hearing the
Well,
new.
first time we're hearing it.
First
He's
time we're
invited.
hearing it, too. It's new for us, too.
Fair
Hey,
enough.
that's the beauty of life, right? You got to adapt to changes, and this is a change.
Live
Yeah.
radio.
Yeah.
Hey, Paula, over the break, your son called in wondering when you're selling. He's looking for some of that cash.
He wants the money now, does he?
Money
Yeah.
now.
And let me guess. It was Hunter.
I will not confirm or
Yeah.
deny.
I know exactly. who it
Hunter, I
was.
got you covered by
Yeah. But we're seeing more of that, though. Like, the truth is, parents we're working on a reverse mortgage right now where, they're in their 70s and they're not quite ready to sell the house, but they want to help one of their kids buy a home. So they're actually doing a reverse mortgage so that they can get the money out. They don't have any payments to make, and it's in theory, it's an early inheritance, tax-free. They're taking the money out so that the kids can use it as a down payment to buy their home, and yet they get to stay in their home and at the same time not have payments because they're living a fairly comfortable lifestyle right now, and they don't want to upset that. So they were going to give the money to the kids anyway, but they're just not, they could have done a line of credit at the bank and then they would have had payments every month, or a reverse mortgage, which allows them to borrow the money and not have any payments. And it's, is it more expensive? The reverse mortgage costs a little bit more than your traditional line of credit or mortgage, but it comes with the opportunity not to have to make any payments. So
are you guys finding you're doing a lot more reverse mortgages over the last couple of years?
We're seeing more inquiries because as our population continues to age and they're not ready. And, Paul will talk about the fact that you might be in a 900,000 square foot home or $900,000 home, which might be 2,800 square feet, 2,600 square feet, and you don't need that much space. But to go down to 1,800, the price difference may not be enough that you shake your head and you say, well, wait a second, I'm not going to give up what I've done here just for the sake of 150,000 or 200,000. So I'll stay in the house. And instead, what I'll do is I'll do something like a reverse mortgage, or I'll take some equity
Pull
out,
some of that equity
if I can, to help my kids now, and hope that my house continues to either to maintain the value or go up the way we're used to, 2 or 3%. So that at least I'm offsetting what I'm doing and I'm helping my kids now tax-free.
It's funny you say that. When you were talking there, Frank, I was always thinking about when we were thinking about my son, Hunter. We had a chat because I set him up with my financial advisor, and he was telling me how he talked to our financial advisor the other day. And I said, how much money do you have in your account, bud? He told me what he has invested in his account. And we're sitting here thinking, I'm going to sell my house to give him money? I think he needs to give me money. And actually, I have one of my townhomes that I said to him, I'm like, you're getting at the age now. You're 21. You're getting into real estate. And I said, why don't you start living on your own with your girlfriend? And, you can live in one of my properties, and I'm not going to charge any rent. I'll get you started. I'm not going to charge any rent. Just pay the utilities. He's like, why would I do that? I can just live at home for free and not pay anything. And I'm like, you little Scrooge. You're not even, to have a free house, You're not even going to pay the utilities. Not even the utilities. Like, why would I do that?
And that's why he has a healthy investment account.
And that's
right
why
now,
he has
right?
healthy, the guy worked and chiseled away so much money, and he'd still be like, Dad, can I have money? And I'm like, but you have money. Oh, I'm not using my money. Hey, that's how millionaires are made, man. That's how millionaires are made.
He's on the right track for sure.
But he is on the right track, and he's doing right, and it's very tough. I mean, your son's got an advantage where, he's been able to do this and live at home, but not everybody has that same advantage, and it's tough. Like, you get out of university, and, we talked about the jobs report that came out. The highest unemployment rate is for 24 years or younger. So here's kids that are going to university and spending thousands, tens of thousands of dollars to get an education. They're coming out of university and those jobs aren't there. And I'm afraid with AI getting more and more powerful as we move forward,
definitely,
how many other jobs are going to be taken away?
But undergrads aren't what they used to be, Frank. That's the problem.
Agree.
And listen, I'm not knocking anyone who's got their undergrad in university. Congratulations. That's more than I have. So good for you. But You're right. You come out of university with an undergrad. My daughter says to me the other day, I put her through 5 years of Queen's University. She calls me. She's like, Dad, I think I want to be a realtor. I want to come work for you. I said, well, what?
Yeah.
You did
After all this money
and 5 years of university, you want to become a realtor. I said, you should have told me that 5 years ago.
Yep.
You should be honored following.
I am. And listen, the beauty of real estate, it's a wonderful job because you're helping people and you get to see the smiles and you get to see the rewards. It's a business that's very cutthroat. It's a business that's long hours. People say, well, you get
24/7, right? You have to be attached to your tether to your phone.
That's the biggest problem, Greg. So I was telling my daughter that. I said, listen, she goes, but there's lots of money in real estate. I said, oh, there is. There's decent money in real estate, but think of the people you're helping. But also, if you want to be successful in real estate, you are a slave to your phone. And that's the biggest problem. Like, you have to set your hours. You have to carve your hours where, you take some time off and things like that. But, someone calls you and says, hey, I'm looking to buy a home and I want to see this home, this home, this home. And it's a hot market. And you're like, can I show you next Monday? Like, they're gone. Those homes are gone. So you have to show them tonight. And that's the beauty of real estate, but also the pain of real estate. And it's, I always say that it's a profession that I believe, much like mortgage brokers, I believe it's a profession that's very undervalued because, they think that we do nothing and we make all this money, where the truth is we work hard. So do mortgage brokers. They work super hard. When you're unemployed, when you're an entrepreneur, I have all the love for entrepreneurs because it's you taking big risks and you are
Which you are an entrepreneur if you're a real estate agent or a mortgage broker.
you are.
And the
Right?
expenses behind the scenes that the average person doesn't think about, because they don't have it. As a salaried job, you don't have some of the expenses that happen behind the scenes. To be licensed as a realtor is not free. To take the course takes a while now. I mean, it used to be much easier. Now it takes a long time.
It's much
But on
harder
a
than it
monthly
used to be.
basis, I mean, in our industry, we have to errors and omissions insurance. We've got to belong to associations. We are watched very closely by the Financial Services Commission. So we've got a lot of expenses that go with that as well on a monthly basis. When a customer
Before
calls
you've even
us,
done a deal.
before we've even done anything, if a customer calls us, we do an application, we have to pull their credit check. Well, those credit checks aren't free. They cost us quite a bit. And there are times when we're pre-approving a client and they may not buy for a year or two. So now you're going through all these expenses plus your time and everything else that goes with it. So, I think a lot of the average person who's on salary doesn't think about that stuff. But, real estate agents, I think it's gotten better. I know it's gotten better. Like the courses have gotten better. The education's gotten better, where there's much more professionalism to the role, even though there's still some people that probably shouldn't be in the industry. And I think it's the same thing on the mortgage side. And there's bankers as well out there that should not be bankers. The way they do business is not ethical, but yet they get away with it until they get caught. Eventually they all get caught and then they're out of the business. But they hurt the industries when there's those types of individuals out there.
The real estate industry as a whole, I used to almost make a joke and say the bars of entry are way too low. They're super, super low. Anyone could get into real estate. Well, they've changed that. They've definitely changed that, and I absolutely love it. They've gone to Humber College, where now it's a college program. The bars of entry are very high. People are failing exams because they're so hard.
Talking about your son Hunter, just finished his
course.
all his
It
courses,
literally
and it took him
it
quite
took
a
him about
while.
18 months. 18 months, and don't quote me on this number, but it's anywhere between $500 and $6,500, like for your course. You got exams you got to take. You need to get 75 in your exams. It was I was lucky enough to go through it with him to see it. And I mean, he'd be like, "Dad, I need your help. Can you help me with these? Here's 10 questions." Truthfully, I'd get about 4 of them right. Like they were hard questions, and they're teaching them right now, which is great. I mean, if you're putting, and even mortgage brokers too, you're putting people's money in your hands and you're putting people's livelihoods, huge decisions, huge investments. You better take that very seriously. And that's why I've always said, you're doing this industry part-time, you're doing, Frank, your industry part-time. No, you just can't.
It's very difficult.
Well, you got to keep up with education. Education is key.
Yeah.
And if you don't keep up with education, you're falling way behind. And I love what the real estate industry has done with the education system. I love what they've done to make realtors more educated and better at their job. And the schooling is way tougher, and it's great what they've done for the
and as
industry.
Frank said, just bringing that professional level way up.
Yeah, so I have a lot of compassion for realtors, and I have a lot of compassion for mortgage brokers and all entrepreneurs who have actually taken all that risk. I mean, I joke, if I told you what my monthly expenses are before I turn a profit, you'd vomit in your mouth. Like that's a stress. Like that is a stress that an entrepreneur has to take, and that's why I have a lot of compassion for any entrepreneur.
So now's not the right time for me to ask for a raise? Is that
Well, that's a tough one, Greg.
You do extra work here, so I think you're good.
Yeah, I agree.
Totally kidding.
But entrepreneurs, as much as we have a lot of appreciation for them, if they're applying for a mortgage or a loan, boy, they get grilled harder than anybody else does, which seems unfair because, an example that I always use is they get a car loan. Even though they put it in their company name, they have to personally guarantee, so it shows up on their personal credit bureau. So then you apply for a mortgage, and the banker, the lender, will ask for their tax return, and their tax return clearly shows, because they're self-employed, that they write off their vehicle. So therefore, it's a write-off. So therefore, their net income is less because the expense of a vehicle is on there, including the loan payments.
You're reducing your net income.
And then at the same time, they count the loan against them. So I say, but you're double dipping now. Like you're penalizing the client because you're saying they may have made $100,000 gross, but let's say they're down to $80,000 because there's a $20,000 auto expense. And now you're also taking the loan and you're counting that against them too. You're counting that as a liability. So it's a double dip. So you're making it unfair for self-employed people to get further ahead.
Here's the one thing that used to, and I'll ask you, Frank, if this has changed, and I hope it has, and I'm pretty sure it hasn't. I still remember in the day where I was buying lots of investment properties, and half of them I owned. Like I had 50% equity in half these homes. I had lots of cash in the bank. My business was thriving. I need to get a mortgage. Sorry, you have too many doors.
Yep.
Like that drove me nuts. I'm like, but hold on, I have the money for it. I got tons of equity in these buildings. There's no risk to you. You have too many doors. So you don't fit in the box. Is
this
that
what the
still
banks
a problem?
used to say. This is what the banks used to say. Well, then it's a business now. It's no longer an investment. Now it's a
So
business.
what?
So we treat it as a business.
So what's the threshold?
Thank you. That's what we would say. But to them, they always look at very, very worst case scenario. The very worst case scenario was them with the real estate market would crash, and therefore they're in the hole for a lot. So what some banks came out is they came out, hey, like we'll do as many doors as they want, but we only want 5 of the mortgages. So if they have 10 doors, we don't care, but we'll do a maximum of 5 mortgages.
For that one client.
Yes. The other thing that they've done now is they've made it a disadvantage to borrow on investment properties by some banks are still 50% of the rental income is all we're going to use to qualify. And I always used to say, but vacancy rates are at 2%. Why are we using 50%?
That rental income's not going to drop 50%.
Are at 98% chance of renting this property. Why are we only using 50%? Because that's the way they're minimizing their risk.
Right.
And, of course, they premium the rate as well. So, again, banks are in this. They're nice. When you need money, they're there for you. But they're also there to become very, very profitable. And we see it in their quarterly reports and their annual reports when they announce their profits. They're very rarely do they go south. They
$3 billion a quarter.
Yeah,
$3 billion.
Listen, I'm not. I'll never endorse the American way to do things because look what happened to their system.
Correct.
Saying that though, they are way more entrepreneurial friendly than Canada ever
but
is.
riskier.
Definitely
but they take more risks.
Riskier, but
the banks don't take risks here.
But let's say that situation I was telling you that I have all these units, and I had tons of equity in all of them. I got loads of money in the bank, and they're like, "You have too many doors."
Yeah.
Like, where was I at risk? There was no risk for them there.
It's not, and you know what I mean. So this changed when the stress test got introduced in 2016, 2017. Again, it took them 7, 8, 9 years from when the housing crisis happened in the U.S. for them to dot all their I's and cross their T's. And they came out with this stress test, which may or may not be around in a little bit, and we'll talk about that maybe in future shows. But what it did is the rule came in where the banks and lenders have to use your income and not necessarily your credit history or net worth to calculate whether you qualify. So you have to be able to carry that debt based on your income. And where it becomes problematic is if you're an entrepreneur and self-employed, that becomes problematic. So there are programs, though. We're starting to see a little bit of good news where there are some lenders now that will look, if you're self-employed, they'll look at the last 6 months or 12 months business bank statements, and they can assess what your income might be based on the amount of deposits that are going in your business account so that, they don't necessarily use the net income anymore, but they can use, and depending on what your profession is. So we are seeing some latitude. But it's slow coming for sure. Yeah. And I know we got to go to break. You're looking nervously at me right now.
The trigger finger's itching.
There you go. Go for it.
But you know what? Just before we go to break, we've done how many shows?
909 now, I think. So not bad.
First show. I know Greg's been on many shows, but first show at the helm. I think he's done a wonderful job.
Amazing.
521 Talk, 521-8255. We'll be right back. All right, we're back. Paul.
Are you insulted that they don't say, and host Greg Tilley?
Well, I mean, the whole thing's brand new, including me.
Yeah.
So, Paul, I had somebody ask a question the other day about the guaranteed sales program. And I'm not a licensed realtor, so I obviously don't know a lot about it.
Well, so this is a program that I brought to Ottawa as the first person to bring this to Ottawa. There's been a couple copycats, not sure how they do it, but so basically I give you a guarantee on your property where if your home is not sold in 120 days, I'll buy it from you. And it's a straight up program. It's more like an insurance program where I give you a percentage of asking price. I put that on in Ontario Real Estate Association contract that in 120 days, if your home doesn't sell, I bought it for that price. We agree to everything up front. And then, if we put your house on the market as normal, if you get a better dollar, we rip up my contract, you take the better dollar is the way it works. And it's funny you're asking me that because right now it's coming back, which is weird. In the last probably 3 weeks, I've probably talked to 5, 6, 7 clients, a couple of the agents on the team about the guaranteed sale, and I'm just like, wow, we haven't done one of those in a while because we haven't needed to. But there's.
So what are people asking about? Like, why are they interested in? Is it just the market right now, how it is?
So this is where the program is. It's really for two people. It's for usually the elderly who just want the peace of mind of knowing their house, worst case scenario, is sold for something. We're still going to get our better dollar, but it's sold. And so they don't want to take the risk. They just want the peace of mind. So it's usually for that, for one. And it's for someone who's usually gone out and bought a home and they're struggling to sell their home.
Right.
And they also know that if they don't get their home sold, they can't move ahead on this house.
They can't close on the new house.
So I can come in and give them a guaranteed sale, which is a guaranteed contract, which means their house is sold. They can take it to the bank, and the bank recognizes that as a sold home. Now, if we get better dollar, we rip up mine. They give the better contract, which is awesome. And 9 times out of 10, they're going to get that better dollar on the market. But that 1 time out of 10, they don't. They have the peace of mind that their home is sold.
They just want to feel secure in it.
They want to feel secure, but it's usually, like I said, for someone who's a little bit scared of the market, just wants that nice price on paper saying my house is sold. They're able to take it to the bank, or the person in a jam. If you're in a jam and you have to get your home sold, you need that guarantee. I can put that on writing for you that you can actually take to Frank and say, here's my guarantee. My house is sold. Can I get my financing on my new home? And it's happening more and more right now because people are buying homes. Market's shifted a little bit. Some homes are struggling to sell, and they're like, oh man.
Taking a little longer to sell.
They're taking longer to sell, and they're like, I can't get financing on my new home that I bought that closes. I'm going to get sued through the pants. I have to close on this home, so I need some sort of guarantee that my home is sold, and I can step up and give you that guarantee that your home is sold.
Frank,
Well, amen. But not only that, what Paul said, the guaranteed sale program is a good program from a standpoint of it allows a client then to be able to get bridge financing. Because I get a lot of calls from clients saying, Frank, I need bridge financing. I bought a home and it's closing on this day, and I got my house listed. I said, well, you don't qualify for a bridge loan unless your house is sold firm. That's what the guaranteed sale program does. So it does open up that door. But for someone that doesn't want to go to that step, then AMIC, Advanced Mortgage Investment Corporation, does mortgages for specific scenarios where the property hasn't sold yet. Now, typically, what I normally say is let's wait until about 3 weeks before you close on your new house. And if it hasn't sold yet, that's when we really start getting aggressive at getting it done.
Look at options.
Some clients want to do it beforehand because they don't sleep at nighttime. So I say, sure, I'll get you an approval beforehand, but we'll really start signing everything 3 weeks before, because then we'll know for sure that you're going to move forward, because we need to do appraisals on the property. So I don't want to waste their money by having to pay for appraisals when we may not need appraisals if they sell, because then we can convert it to a bridge loan, which in theory doesn't need an appraisal. So again, we give them peace of mind knowing that they've got that in their pocket, and then we'll wait until 3 weeks before closing. And if their house hasn't sold yet, then we'll get the appraisals done, because then we're likely moving forward with the private loan as opposed to the bridge financing.
So there's
the private loan as opposed to the bridge financing.
So there's two options for you there. And the one thing I will say, I've been in the industry for 21 years. I've been doing the guaranteed sale program probably for 17. So I'm the only one who really has a guaranteed sale program that I brought to Ottawa. Just be careful of the copycats and get some testimonials. Have you actually bought a home? Get some of those testimonials and see, because I know I have. So
right.
No, only 2 today. Actually, one birthday. Darren Sador, who I talked about last week, but I didn't realize he had a milestone birthday. It was 50. So Darren Sador, one of our top agents in our company, and great individual and great golfer, actually. But happy birthday to Darren. And our good friends Paolo and Lori and their son Zach, who's getting married today. So congratulations on Zachary and his nuptials today.
Congratulations
on Zachary and his nuptials today.
Congratulations.
Congrats.
And the only thing I'm going to say after 909 shows, and Greg, your first show, really proud of you.
Well
you
done.
did an amazing job on your first show hosting open house.
It's got to be in the name, Gregory. I don't know.
Thanks, guys.
No, you've done a great job.
Still can't fill Steve's shoes, that's for sure.
That's for sure.
No, they're big shoes to fill.
Huge shoes.
But you've done a great job. So.
Have a great week, everybody.
Great, and continue to support local businesses and charities, everyone.